What is going on, investors? Time to talk about Tesla stock, which just a few weeks ago was trading at $900 per share, and now it is trading just under $660 per share. Over the last month, this stock is down 21%. And so in today's video, we're going to talk about some of the reasons why Tesla stock has been going down, and then finally we'll come over to the stock chart and decide if now is a good time to buy Tesla stock since it is down over 25% over the last few weeks. Some of the reasons why Tesla could potentially be down is a lot of people are pointing actually to Treasury yields. Yes, Treasury yields. Just a few months ago, these yields were at 0.5%, and now today they're standing at about 1.5%. Not to get in a long macro discussion, but when rates go up, it makes investors less willing to make speculative bets on speculative stocks, especially ones that have run as hard as Tesla and other names like Apple and Microsoft and Facebook and Amazon. That is why most of those stocks are headed lower over the last few days, because when Treasury yields go up like this, it makes other sectors more attractive. Some of the other sectors that are attractive these days is the XLF, which is just a traditional financial ETF with the likes of Wells Fargo and Bank of America and Morgan Stanley. Over the last 6 months, this ETF is actually up 30%. And if yields continue to head higher, stocks like this will likely continue to do well. Now, one of the other concerns about yields going up is inflation. We've seen everybody worried about inflation, but guess what's not showing any worry about inflation? Typically, when you have inflation, gold goes up, but it's actually at a 9-month low, so it might make you wonder if the 10-year Treasury yield has gotten too far out ahead of itself. Now, the other stocks that have been doing well, or actually the other sector that has been doing absolutely phenomenal, is crude oil futures. Take a look, up to $61 a barrel on the crude oil futures. A lot of people, when President Joe Biden was elected, piled into clean energy and solar stocks without realizing that during the Obama administration, crude oil absolutely soared and had one of its best stretches in decades. The way that Democrats are able to push their green energy agenda is to drive crude oil prices up and not down. And that is why savvy investors have been piling into crude oil over the last few weeks. Now, moving back to Tesla. Tesla is traded at a very richly valuation in many people's opinion. I have a price to sales chart up here. Most of these companies, some of these companies make money, some of them don't. But a sale is a sale at a car company. We see Tesla here in the orange line trading at about 20 times sales. We see that is still richly valuated over the last year or so. This stock is traded lower than 5 times sales just over the last year. It's really just been over the last 3 or 4 months or so. This stock has gone from about 10, 11 times sales all the way over 25 times sales. Now, we know that the electronic vehicle market does trade at a premium because you can take a look at NIO, and that trades at 24 times sales, although the stock was also trading much higher than that at about 35 times sales. Now, compared to traditional auto companies like GM and Ford trade at a fraction times sales. In fact, 0.63 times sales for GM and 0.39 times sales for Ford, barely even visible on a graph like this. So certainly from a price to sales perspective, even though EVs do get a premium in today's marketplace, compared to itself, Tesla's price to sales ratio is probably out ahead of itself and was due for a little bit of a pullback. Now, on to the stock chart. This stock has been actually sideways consolidating a little bit over the last few days. And I want to point out something very specific here for you on the chart. Notice this big, gigantic green candle. These candles down here represent volume, and it is the number of shares that trade hand on a certain day when we're talking about Tesla. And look at this big, gigantic green candle right here. And one of the reasons why I'm pointing it out to you is because it represents this candle from about, we'll call it about $625 per share, all the way up to about $700 per share. A lot of buyers and sellers, but more buyers than sellers, stepped in at this price level for Tesla. Now, I want to show you that this is exactly the price area that we're at today with Tesla shares. So buyers are stepping in at a certain degree here at these levels because we've actually held fairly steady between about $653 per share up to about $700 and even a little higher than that with Tesla over the last 4 or 5 trading days with this stock. Now, we are in a well-defined downtrend with this one, and as we break this $655 mark on Tesla, we see the last time it did it was on this candle. It came all the way down here to about $619 per share. If the momentum in this stock continues to be negative, I would certainly expect we head back to the $619, $620 per share on Tesla. Lower than that, you have levels at about $600 per share. A break of that level, and all of a sudden your 540 level comes into play. Further down from that, you have your 50-day moving average currently sitting at about $470 per share. Quite a bit of sideways consolidation price action in this one. So the question is, do you step in right now and do you buy Tesla shares? Here's the caveat that I would give you. Are you going long this stock? Do you already own this stock? Are you one of the buyers up here? Are you stuck in this one at over $700, $800, possibly even $900 per share? Well, if you are, you want to learn the art of setting maybe a stop loss and maybe potentially getting out of a position when it goes against you. If you want to trade Tesla, I think there is potentially some setups here as we find some footing here at the $650 range on Tesla. I think you can step in here in these ranges with the idea that you have to have a stop loss either at the $620 mark or around the $600 mark, because a break of those levels and the likelihood of this stock heading lower are rather high. Now, if you assume that the stock will bounce at these levels, which it did here on a massive volume and went from about $650 all the way up to $900 per share, it will have to do so on heavy momentum because we are in a defined downtrend with Tesla. Now, personally, I'm in this stock for, I think, in the $300 price range in terms of my cost basis. I'm waiting for a deeper pullback. I am waiting to see if the $620, $600 levels are tested. I will evaluate the situation if and when Tesla gets down to that point. If we break those levels, the odds of me wanting to buy Tesla shares continue to go up. Now, would I anticipate Tesla bouncing at the $650 level and bouncing up very high up to the $700 level overnight? Probably not, unless they made some kind of acquisition or some major news came out of Tesla, which is certainly possible. So to sum things up, I like the level that we're at now. The buyers certainly stepped in when we were at this level just a few months ago, back in December. In fact, they showed up in record numbers here in terms of volume. Those buyers appear to be stepping in here, although when we look at volume, not in a very significant way. As this stock continues to retrace, it does create buying opportunities, in my opinion, but you want to be careful with this one. If you are worried about your initial investment, your principal, you want to set stop loss in this one at the current time at around $600 or possibly $620 per share, waiting for a bounce in the $650 range back up into the $700 range. So hopefully this one helps you out. It's one that we continue to monitor here on the channel. Every Friday, we have a show where we talk about all the FANG stocks, plus Microsoft and the aforementioned Tesla. Hopefully you guys enjoyed this video. Good luck with your investments.